Hello everyone. Namaskaram. Welcome to BCCA channel. I am Bhavya, a qualified CMA. So I will be dealing you paper number 5 of the CA Intermediate Group 2, Auditing and Ethics. So this is the first session for the mega exam oriented batch, and I will be sharing you all the details and clarifications regarding the materials, the syllabus, what about the old scheme students, and what all I will cover in this session. I will tell you in detail. So let's start with this. So the material that I will be using is BCCA material, which has been drafted as per ICAI new scheme book, and also this EVO batch will be taught by using my handwritten notes. So I will be teaching you from my handwritten notes, and that will also be given to you. My handwritten notes will be in very much in detail, and the same content which is present in the ICAI book will be taught in this handwritten notes as well. So, and my teaching will be not based on question and answers, but I will focus most on the concepts. If you get clarification regarding the concepts and the terminology of audit, it's really easy to attend any type of questions. And I will cover around 90% of the syllabus in this exam oriented batch. This is not a regular batch. We just have around 2 months left for our examinations. So if we start regular batch, the students who are attending for examinations in the May month will not be able to get enough time for revision. So this is an exam oriented batch, and I will be discussing all the most of the case studies in the ICAI material and the MCQs. Each and every MCQ will be discussed in this session, and textbook backside questions and also the past question papers and MTPs will also be discussed in detail. So I think I have given you clarification regarding the scope of this exam oriented batch. So the material I will also provide you, that is also drawn as per the new scheme book of ICAI, and we will be discussing the textbook backside questions, past papers and the MTPs, everything, so that it will be much easier for us to know how the examination, how the answers are given in the examination. And we will focus on presentation also. Presentation, how to present the answers in the examination also. I will be teaching you tips and tricks regarding that. So let's get into the syllabus of this session of the subject. So the order of the chapters that I'm going to teach is as per ICAI only. So there is no change in order. And what are the topics that I will be discussing, and what are the topics that you can go for self-study, and even if that is done, you will easily be able to understand. I will be discussing right now. So the first chapter is the nature, objective and scope of audit. It is mostly introduction to the audit and objectives of audit, and a new topic has been added which I will discuss in detail. So I will take more time on the first few chapters in order to give you clarity regarding the subject and introduce you to new terminologies. So that is why I will invest much time in the introduction chapter, so that it is easier for you to understand the upcoming topics and concepts. So the first chapter will be dealt in full, no skipping of any topics. And the second chapter is the audit strategy, audit planning and audit program. Here also 100% of the portion will be discussed. And coming to the third chapter, which is risk assessment and internal controls. Here, previously, we used to have two separate chapters for this. One is the risk assessment and internal controls, and the second one is the audit of automated environment. Now, both the chapters have been combined into a single chapter with the heading risk assessment and internal control. So this chapter I will not be dealing in this mega Evo batch. Even if you study by your own or skip it, that is not an issue for you, because we want to score around 70 to 80. That doesn't mean we have to cover 100% of the syllabus. You just give a novel reading for this chapter, that is enough. But I will not be dealing this in the exam oriented batch. Done. And the other topics like risk assessment procedures, materiality, and internal controls will be discussed in this session. And the fourth chapter, the next one, is the audit evidence. Audit evidence will also be discussed in detail. We have regarding the audit evidences, internal auditors, audit sampling, the few chapters which have been divided in the old scheme have been combined together, like analytical procedures, which is SA 520, and audit sampling used to be two separate chapters. I mean, excluding the audit evidence in the old scheme, now the three chapters have been combined under the heading audit evidence. So I will be dealing audit evidence, internal auditors, audit sampling, 501, 505, 510, and 550. The headings will be discussed in that chapter. You don't need to worry, even if you don't know the name of a single standard also, because I will be dealing from scratch. That is the main motto of this exam oriented batch. Even if I cover only 90% of the syllabus, I will make sure I will teach you from the basics of auditing, so that it is easy for first time listeners also. So you don't need to worry, even if you don't know a single chapter name also, that's not at all a problem. Attend my classes. I will give you 100% conceptual clarity of what all topics I teach. You can easily score 60 plus with this session. And the fifth chapter is the audit of items of financial statements. Each and every item ka audit I will be dealing in this chapter. No skipping of any topic from this chapter. And the sixth one, the smallest chapter in my opinion, audit documentation. This will also be done in detail. And completion and review. This is a new addition to the new scheme, but it has old standards which were there in the pronouncements book, but it has been added to the new scheme material. So we will discuss few of the standards, and few standards will be skipped, but this will be discussed at the end of the session. We will see the timing available for us, and then we will discuss. The main important topics from this chapter will definitely be discussed in detail. That one you don't need to worry about. And the next chapter is the audit report. Here, audit report, everything will be discussed. One main thing that students should know, if you've already attended for old scheme classes or you've already studied auditing and assurance, it's a bad news for us. Auditing is not included. I mean, company audit is not included for us. So one of the easiest paths of audit that we first touch is company audit. And unfortunately, it has been removed from auditing subject, because we deal with this company audit already in the corporate and other laws subject in group 1. So company audit has been removed from auditing. But few of the portion is still there, audit of branch office and joint audit, and reporting requirements as per the Companies Act 2013. These things are there, and also CARO 2020 is also there. These things we will be discussing in detail. Okay, and coming to the next chapters, chapter number 9, special features of the audit of different types of entities. Different types of entities audit, like governments and local bodies, NGOs, other entities like hospitals, hotels, NGOs, everything will be discussed. But few of the topics which are not important, and which I feel like even if you give novel reading, that's enough, because for all the entities, some of the procedures of audit are similar, which we will know in detail. So few topics I will just leave out, which you can just give novel reading and you can get the clarity. Novel reading here means just reading once in detail so that you will have a clarity. Not writing any notes and not writing any detailed questions and practice regarding the topics. Just give a novel reading, like how you read a book, like that. And the next chapter is audit of banks. Here also I will be leaving few topics. That's all, very few topics, but everything will be discussed in detail. I will also tell you what few topics you should deal, how you should deal, and I will note that topics in the handwritten notes. You can revise it. Okay, and the last chapter, they think that auditing and ethics, two different segments, and ethics is a different part in this particular paper. No, ethics was previously included in the first chapter of audit, like ethical requirements and professional ethics that an auditor needs to follow, but they have divided into a separate new chapter. That's all, nothing new changes, like ethics need not be worried about. So yeah, ethics in terms of engagement also we'll be discussing in detail. So this is the syllabus, and what are the topics that I will be discussing, what are the topics that I will be leaving out. And yeah, I think I've given you much clarity. Even if you don't know the meaning of audit, or even if you don't know what are these chapters, what are these standards, should I read these many, you don't need to worry, everything will be dealt from scratch. Got it? So we will start the session of the Mega Ego batch with the first chapter, nature, objective, and scope of audit. Many of you might see in some of the books, like first will be introduction to audit. Ma'am, are you not going to teach us the introduction or basics of the audit? You will directly skip into the chapters? No. I will be dealing with introduction and basics of audit in this first chapter only with my handwritten notes. You don't need to worry. We will learn from scratch with the term audit. Got it? So shall we start our session? Yeah. So yeah, let's begin the session with the chapter number 1, which is the nature, objectives, and scope of audit. Here we will be discussing the basics. So let's start. You have to tell me one thing. You have entered into this world of CA, and many of your siblings or your friends, or maybe your parents, your relatives, are in a perception that as a qualified CA, the work of a CA, it has the name accountant, chartered accountant, right? Is preparation of financial statements. It's preparation of accounts, presentation of accounts. The main thing that we think that we do is prepare the journals, ledgers, and the trial balance, and then take these and prepare the financial statements like the P&L and balance sheet. But in reality, no, my dear, that is not your job. As a qualified chartered accountant, your main job is to verify the accounts and the financial statements prepared by an accountant in the company. Not only a company, any entity. So the verification, checking that if every entry has been recorded, or is every entry is syncing with its supportive evidence or not. Evidence means the proof, like the bill or the invoice or the check or the cash transaction or anything. So the main job after you become a chartered accountant is verification of the financial statements that you learn how to prepare and present in your paper number 1, that is advanced accounting. You will learn how to prepare and present the financial statements, but that's not your job after you become your CA. The main job is verification of the financial statements. That is simply called as auditing. So auditing in general is nothing but verification of the financial statements of a business organization. That may be a company or a partnership concern or a proprietary concern, or a society or a trust or government, whatever it is. So simply auditing means verification of financial statements. So what are these financial statements? You already know this. P&L account, the balance sheets, the notes to accounts, cash flow statements, trading account, everything comes under the heading financial statements. So you will be verifying this, and the verification process is called auditing. So you might be having a doubt, ma'am, why? Because preparation and presentation of financial statements is enough, right, for a business organization? Because a business should know what all the expenditures it has been incurring, what are the incomes it is receiving, what all the transactions it is entering, what are the assets, what are the liabilities. For knowing this only, the main purpose of preparation and presentation of financial statements. But why do we need audit? Why do we need verification by a CA or who is a professional? Yes. So to know this, we will see the importance of audited financial statements with few examples. Shall we? Yes. So Investors. Who? Investors. For example, you wanted to invest some of your money, your pocket money or your stipend money or whatever it is, you want to invest in some company. If you're just investing around 2000 rupees or 1000 rupees, the first thing that you do is go to a YouTube channel, search which company has a good price in the stock market. You will just blindly follow the YouTuber's words and you will start investing. But if you're very serious about your investment, if you're investing like around 1 lakh or 2 lakhs, what is the first thing that you do? If you want to invest in a company X, for example, Tata company, what is the first thing that you do? You will check the performance of the company. Yes or no? Is it performing well enough? Is it having profits? What are the operational results? What is the profit? What are the assets? What are the liabilities? To check all this, what is the first thing that you check? Financial statements. Yes or no? Will you blindly trust the financial statements that the management of that particular company is submitting? No, right? Because there is scope for making mistakes, there is scope for making some frauds or manipulating the records or entries or the amounts in the financial statements. To portray a very good performing company, the management can do anything to the financial statements. Yes or no? So in order to create some confidence on the investors, what the company does is get its financial statements audited. What is that? Gets its financial statements audited. If the financial statements are properly verified with the evidences by a CA who is the professional in this field, knowing all the subjects, what is the main thing that you receive from that audited financial statements? Confidence. Yes, the financial statements are verified by a professional. That means there is less scope for frauds. I can now trust these audited financial statements and then I can decide whether the company is performing well or not. So there comes the need for audit of the financial statements. Now you might think only big companies should do audit for their financial statements. For small companies or who are not that famous or who are not recognized, there is no need to do audit of. We will see the second example. Third one, banks. Banks and financial institutions willing to lend funds. See, now you're a startup company. So the first year, you're a startup entity. So the first year you've performed very well, you've got good profits, and now the second year you want to expand your business. For expansion of business, what is the first thing that you need? Funds. Now you don't have funds. The first thing that you do is go apply for a loan to a bank or a financial institution, or you go to a lender. Okay? Banks or the financial institution, in order to trust you, in order to decide whether you can perform well or whether you can repay the loan or not, what they will check? Your financial statements. Why? He has to decide whether you are performing well or not. He will check your financial statements. Can he blindly trust the financial statements that you submit? Nowadays, everyone is submitting fake certificates only. How can they blindly trust that financial statements? They might be fabricated. Yes or no? So the banks or the financial institutes will again send the entity to get your audited, get your financial statements done audit. Then I will believe you. Then I will proceed further for the loan application. Yes or no? Now lies the importance of audit. Even for applying for loans or gaining the trust of the banks or the financial institutions, you need to get your financial statements audited, because banks will blindly trust if the financial statements are verified by a professional. Yes or no? Yes. And also shareholders, you might have learned in your law, shareholders are the owners of the entity, but they will not be part of the management. So management is the main person who is involved in the preparation and presentation of financial statements. Now, in order to protect the interest of shareholders. The shareholders can't blindly trust the management. Is the management not misutilizing my funds? Is the management performing well or not? Is the management showing real results in the financial statements or not? All these things, the answer is get your financial statements audited by a CA who is the professional. Audited means verified. Is the statements, is the transactions, are the amounts correct or not? So here comes the importance, the need to get the financial statements audited. In this subject, we are only going to learn about the audit of financial statements, not any tax reports or any other thing. So we are every time think of financial statements when you get the name, when you get the word audit. Got it? So now I think I have made you clear why we need audit. And who is doing the audit? A chartered accountant. Yes or no? And what is the basic meaning of audit? Verification. Verification of financial statements. So let's proceed further in this chapter. So all these people, the shareholders, the investors, the banks, the financial institutions, and various users of financial statements, why are they relying on these audited financial statements? Because these provide confidence and assurance. Assurance means kind of a trust. Yes or no? That yes, we can trust these financial statements are showing the true results of the company. Got it? So, yes, who are the users of the financial statements? I will be using this term a many times in this batch. So I'm making you clear with this term. Who are the users of this financial statements? Shareholders. Who are the owners of the company? Employees who work in the company. Customers. Government. Regulatory authorities. Bankers. Each and every person in the external environment of the business organization and internal environment of the business organization will use the financial statements, audited financial statements, for making various decisions. Yes? Yeah. So, audit is performed by whom? Audit is performed by whom? A chartered accountant. You and me. Yes or no? Why? Which kind of regulatory body is responsible for CA? What is a regulatory body? Someone who gives licenses, someone who makes rules and regulations, someone who gives permissions, or someone who gives registrations for a particular group of people or for a particular group of activities. Example, the main example, if you think of regulatory bodies, is RBI. What does RBI regulate? Regulates the issue of banknotes. Simple. Yes. SEBI, the Securities Exchange Board of India. What does it regulate? It regulates the stock markets and the securities. Yes or no? Likewise, for chartered accountants in India, there is a regulatory body, which is the name of our institute, the Institute of Chartered Accountants of India. This ICAI board will give memberships, certificate of practices, will create rules and regulations for the CAs to perform their audits, to perform various functions. Yes, now you know what is the regulatory body for CAs, ICAI, your institute. Yes, for companies, the audit is done by CA. Now we have seen that audit is performed by whom? CA. For companies, audit is done by CA, or firms where the majority of the partners are CAs, partnership firms. Okay. Now what about government? Even our government will be involved in various money transactions. Yes or no? Like it will be expending, it will have more related expenditures like receipts and also different transactions. Even that will prepare, government will prepare accounts. So who will audit these accounts of government? Who will audit? You can see in the screen, of course. Comptroller and Auditor General of India. Comptroller and Auditor General of India is a constitutional authority who is created for the purpose of auditing government accounts, government expenditures, government receipts, and all the financial matters of the government. Okay, who will be auditing that? The Comptroller and Auditor General of India. You might come across this authority in your law. Reading the chapter Audit and Auditors, the appointment of the first auditor of a government company. Did you remember? Even if you don't remember, don't worry. Read that chapter, you will easily know that. Okay. So, Comptroller and Auditor General of India, the CMAG. So, is the CNAG an individual or an authority? Like, yes, of course, it's an authority, like a group of authority, like a separate segment, or is an individual? Many of you think that CNAG is it's an establishment where so many people will be working. Yes, but CNAG, the term is telling that it is an individual. So, Comptroller and Auditor General of India is an individual. Right now, currently, the CNAG of India is, I will write here. Sri Girish Chandra Murmu. Okay, this is just for the general knowledge purposes. The ICAI will not ask this question. So, yes, we'll get back to audit. So, now let's start with the basic, the origin of audit. Origin. You might be wondering now in the modern world, maybe in some 2000s or 2010, the companies have established, business organizations have started, and now the need of audit has begun. The audit is a modern world concept. Many of you are in that perception, but no, audit has been evolved from the 4th century before Christ. 4th century before Christ. It has begun from that period of time. And the word audit has its origin from the Latin word audiere. Audiere means to hear. Ma'am, audit is verification. Hearing means, use of your ears, right? What is the link between these two terms? Why is audit means to hear? So previously, in medieval times or even ancient times, auditors used to sit and ask the accountants to read the accounts to make sure that they don't do any mistakes or frauds in the preparation. The auditor will ask the accountants to read out the accounts, and he will hear the accounts in detail, and he will point out the mistakes. So what is the job of auditor there? To hear. So that is why the name of audit has come from the term to hear, the Latin word of which is audiere. Okay. Yes, this is the origin of audit. We don't need to go much deep inside. So yeah. Now let's start with the main thing, the definition of audit, the meaning of audit. So first I will read out the definition for you. An audit is an independent examination of financial information of an entity, whether profit oriented or not, irrespective of its size or legal form, when such examination is conducted with a view to expressing an opinion thereon. Feels like a complicated definition, right? New terms like independent examination, financial information, opinion, profit oriented. What is this, ma'am? The first part of audit is only complicated. No, it's very simple. I will be explaining you each and every term in detail. So, first sentence. Audit is an independent examination. What is independent examination? Independent examination. Examination means verification. Verification is okay. What is independent examination? Independent verification, that you should not be under the judgment, or you should not be biased towards anyone. anyone while verifying the financial statements. The judgment, the decisions that you take while doing the audit should not be subordinate to the wishes or the directions of other person. No, even the management or the workers or the accountant of that particular company can't influence you, can't give directions to you. You have to independently do the audit work, do the verification. So that is the very main aspect of audit. You should be doing the work independently without listening to anyone in the company. Got it? So audit is an independent examination of what? Verification of what? We have seen financial statements, nothing but the financial information of an entity. Financial information is nothing but the financial statements and all material aspects of the financial statements, any relevant aspects of the financial statements, like the inventory valuation, like invoice valuation, like invoice verification, or else looking into the physical presence of the assets which are in the balance sheet. So all the material aspects which are relevant to the financial statements. So independent examination of financial information. What is the financial information? Financial statements and all the relevant aspects of the financial statements. Of what? Of an entity. Entity not only means a company but a business organization that involves all kind of organization, irrespective of whether if it's profit oriented or not. In your law, you might have studied Section 8 companies. Are the Section 8 companies profit oriented? No, these are not profit oriented. These are public, like for the public interest they have been created. So whether profit oriented or not, irrespective of it is a small or a medium or a large company, or whatever the size of the company is, whatever the legal form. What is a legal form? The company, LLP, partnership firm, proprietary concern, society, trust, any entity, be it any entity, you have to conduct the verification of your financial information independently by an auditor. Got it? So of any entity, whether profit oriented or not, any business organization, example partnership firm, proprietary concern, LLP, private company, small company, public company, society, trust, whatever the company is. Okay. Next, the last part of the sentence, last part of the definition is when such an examination is conducted. Why is it conducted? The main view is expressing an opinion. What do you mean by expressing an opinion? Just verification by the auditor is not important. The result of the verification, the opinion of the auditor on the particular financial statements, be it negative or positive, should be expressed in some written format. That written format in which the auditor will express his opinion is nothing but audit report. We have a separate chapter for this. You don't need to worry how the audit report is to be drawn, and everything also we will be learning. Okay, so a written audit report is prepared based on the audit done to the financial statements. So now we know how easy the definition and meaning of the audit is. So let's revise the definition again. An audit is an independent examination of financial information of an entity. What type of entity? Whether profit oriented or not, irrespective of its size or legal form. When such an examination is conducted with a view to expressing an opinion thereon. Got it? So let's move on to the next segment. So while writing the audit report, while conducting the audit, the things that the auditor should ensure. What are the things that the auditor should ensure? What are the things that the auditor can assure to the users of the financial statements is? Number one, the accounts means books of accounts have been drawn up with reference to the entries in the books of accounts. So Books means the journal, the ledger, the trial balance. By basing on the books, you will be preparing the financial statements. Yes or no? So, are the accounts have been drawn up with the reference of the entries in the books of accounts or not? That means all the entries in the books of accounts are present in the financial statements or not. That assurance will be given by the auditor. And the second one, the entries in the books are supported with sufficient and appropriate evidence. All the entries in the books that I've told you, the sales, the purchases, the cash transactions, so whatever the entries are there, are all these entries supported? That means all the evidences like invoice or the vouchers or whatever the particular documents are there or not. Are they sufficient? Are they appropriate? Are they correct or not? So that should be verified and that should be ensured by the auditor while conducting the audit. And none of the entries have been omitted. All the entries in the books of accounts should be present in the financial statement. No single entry shouldn't be omitted. Omitted means being removed, being missed. So the auditor should ensure that all the entries have been entered in the books of accounts. None of the entries have been omitted. Okay. Next, the information in the statements clear and unambiguous. Be it any kind of information that's present in the financial statements should be clearly stated and unambiguous. Unambiguous means which is not confusing, which will not confuse us with unnecessary details. So the information is clear or not, it should be ensured by the auditor. And the financial statements are prepared as per the accounting standards. Yes or no? You will be learning accounting standards in your paper 1 of advanced accounting. So, of course, you will prepare and present the financial statement as per the accounting standards. So, is it prepared or not will be ensured by the auditor. Next, the statements provide a true and fair view of the operational results and the assets and liabilities. So, the last thing that the auditor should ensure is that the auditor should verify is that are the results, the profit or the operational results, be it the profit or loss, the working profit or the loss, are they correct or not? Are they true or not? Are the assets and the liabilities which are stated in the balance sheet showing a true and fair view of the position of the company or not? That should be ensured by the auditor in the process of verification of the financial statements. Got it? So, what are the 6 things that should be ensured by the auditor in the process of audit? Number 1, the books of accounts, the financial statements have been drawn up based on the books of accounts or not. All the entries should reflect in the financial statements. The second one, all the entries in the books of accounts should be supported by sufficient and appropriate evidence. And none of the entries, no entries should be omitted. Okay, and information, all the financial information should be clear and non-confusing. And financial statements are prepared as per the accounting standards or not. All the relevant accounting standards, be it accounting standards or Indian accounting standards, are these standards followed or not while preparation of financial statements. And the last one, the statements are providing a true and fair view of the profit or the asset or the liabilities or not should be verified. And got it? So, there is a new topic in your session which is the interdisciplinary of various fields of subjects with auditing. So that is very simple. As an auditor, the only knowledge that you should have is audit. Am I right? Of course not. If you just read the single subject, it is enough for you to verify the financial statements. Obviously, no, not at all. You need to know many subjects. So what are the subjects the auditor needs to have knowledge of? And in the preparation of audit, the knowledge of these subjects is really important. So what are the subjects? So economics ma'am, I'm an MPC student, madam. My 12th is based on science, madam. I can't know economics. No, you have to know economics. What is economics? The internal environment and the external environment of the entity. External environment means the interest rates, the inflation rate, the foreign exchange rates applicable to the entity, the legal and regulatory framework. That means what kind of act is regulating that particular entity, that you should know. Of course, to audit the company, you have to know all these things. Yes. And accounting, of course. If you don't know the preparation and presentation of financial statements, how will you verify? First thing you should know is making, then you can judge it. Making the dishes, if you know, then you can taste it and judge if it is good or not. Likewise, audit, you have to know the preparation and presentation of accounts, then you can verify the financial statements. Yes or no? And then law. So what are the legal rules and regulations applicable for this entity? That also you need to be knowing. And behavioral science, nothing but your ethics. What are the manners that you have to follow? Simple words, generally. And statistics and mathematics. What is the use of statistics in mathematics? Of course, numbers are involved, you need to know math. The secondary thing is statistics. Statistics means graphical methods you use for doing audit. That thing we will be learning in the chapter of audit sampling. But I think everybody knows the meaning of sampling. An entity will have thousands of transactions, many transactions. Each and every transaction with that supported evidence can't be checked. It is impossible. It is a practical limitation of the audit. Yes or no? Practically, it is not possible. So what the auditor is doing is he will do random sampling. He will take few samples randomly and he will verify. So for that, taking that sample also, you need statistical methods. So you need to know the knowledge of statistics. And taxation, of course. You need to know what are the tax rates applicable, what are the deductions, what are the slab rates and everything for companies. Everything should be known by the auditor to conduct the verification of the financial statements. And the financial management. Financial management in your paper number 6, ratio analysis, capital structure, what are the processes like capital budgeting decisions made, what are the methods you use to evaluate, everything should be known in order to analyze the ratios. Yes or no? And data processing. How do you process the different data like softwares and all? Also, you have to know knowledge about. And the production. Different production processes will need different types of accounts and different types of analyzation of the costs. Yes or no? So, all these subjects are interdisciplinary with the interrelated. Got it? Yes. So till now we have learned the definition of meaning and what are the assurances and what are the things that should be ensured by the auditor during the verification. And then, so we are starting the inauguration of the first standards on auditing. So what is the standard on auditing? Accounts are prepared as per the accounting standards. Likewise, auditing is done as per standards on auditing. Simple. These are the rules and regulations an auditor should mandatorily follow while doing the audit. That is nothing but your standards on auditing. This one we will know in our first chapter only in detail when you go further. Correct? So the first standard that we are inaugurating is SA 200. What is the name of the standard? Overall objectives of an independent auditor, not a normal auditor, independent auditor, and the conduct of audit in accordance with the standards on auditing. First thing is the objectives of auditor. What should be the objective of auditor and how the auditor should perform the audit? How? Based on the standards on auditing. So that is communicated in this standard SA 200, which is the overall objectives of an independent auditor and the conduct of audit in accordance with the standards on audit. Got it? Yes. So what is the first objective that this standard is stating? To obtain a reasonable assurance about whether the financial statements as a whole are free from material misstatements, whether due to fraud or error. Oh my God, so many new terms. I'm done. The first standard is only complicated. No, dear. I will explain you in detail now. I'm there here. Okay. So, the first difficult term that you are facing is reasonable assurance. To obtain, the auditor should obtain. That means he's to get reasonable assurance. What is this reasonable assurance? We have seen that in the top, that the audited financial statement is providing confidence and assurance to the users. Yes or no? The statement, they provide confidence and assurance. So, in order to provide assurance, first you have to obtain assurance. What kind of assurance? Reasonable assurance. So, if you should know the meaning of reasonable assurance, the first thing that you should know is the meaning of absolute assurance. The difference will give you a clear meaning. So, what is a reasonable assurance? Auditor can only provide reasonable assurance, which is a high level assurance, but he cannot provide absolute assurance, which is the complete guarantee that the financial statements are free from material misstatements. Oh my God. See, we have discussed that one of the basic limitations, the practical limitations of audit is that the auditor cannot verify each and every transaction of the company. So if we can't verify each and every transaction of the company, and if we can't verify each and every supportive evidences, how can he provide 100% assurance that this financial statement is true and there are no frauds involved? How can he provide that? So, because of some inherent limitations, that means the basic practical limitations which we will learn in front, some of the limitations is that he can't go check each and everything, and he can't believe each and every evidences that is provided, and the financial statements are somehow some of the aspects are created, some of the aspects are recorded based on accounting estimates. Yes or no? Your contingent liabilities, your provision for taxation, your provision for debtors, everything is based on estimates of the management. So the estimates can go wrong. Yes or no? So if you're auditing such kind of data, can you provide 100% guarantee that these financial statements are free from mistakes? No, right? So that is why the objective of the auditor is to obtain only reasonable assurance. That reasonable assurance is not a very low level of assurance, it's a very high level of assurance. So, auditor can only provide reasonable assurance, which is a very high level assurance. Okay, not very low level. Only, okay, low level of assurance only they are giving. No, there's no need to trust the statements. No. Reasonable assurance, that a very high level of assurance. Assurance means he's giving some confidence with his verification. Got it? So, the first term is understood. What is it? Reasonable assurance. Yes, you'll say no, reasonable price. Not very expensive. Reasonable means yes. Okay, enough. Yeah, like that. And next, reasonable assurance about what? About whether the financial statements, I am writing FS, but don't even try to write FS in your examination. Please, don't write shortcuts. Try to elaborately, in detail, write your answers. Okay? And main thing that you have to do is read the questions properly. That's my few solutions. I will be throwing some few tips of presentation and examination things in middle of the class. So note that down. Okay. As a whole, are free from material misstatements. What is material misstatements? First thing is that you have to obtain reasonable assurance. What assurance are you giving? What is the confidence that you're giving? You're giving that the financial statements are free from mistakes. What kind of mistakes? Material misstatements. Misstatements are nothing but frauds and errors. Yes, material misstatements. Okay, misstatements means frauds and errors. What is this material? Material is nothing but significant. For an organization, is that particular mistake significant, important? Will it influence anyone? Will it affect the decision of any person or not? That should be verified. For example, for a company like Reliance, if you The transaction amount is 2005.50 rupees. So you missed that 5.50 rupees, and can you think that that's a misstatement? For an organization like Reliance, that 5 rupees, 5.5 rupees is not material. It is not significant. It does not influence the decision of anyone. So you have to ensure that the financial statements are free from material misstatements. Only which is significant, this minute 1 rupee, 2 rupee, 10 rupee, that might not be significant for large organization, but that might be significant for smaller organizations. So based on the nature of entity, based on the size of entity, you have to check the materiality that we will discuss. The materiality concept also will be discussed in your upcoming chapter, chapter number 3. Okay, so now, right now, materiality, the meaning is nothing but significant, impacts the decision of the users. Okay, so the auditor main objective is to obtain reasonable assurance whether the financial statements are free from material misstatements. That misstatements may be a fraud or error. What is the difference between fraud and error, madam? Fraud means intentionally the mistake has been done in order to manipulate. Yes or no? In order to cover up some mistake. Yes or no? Fraud means intentional mistake. Error means by mistake. As humans, everybody makes mistakes. So that is not all the times wrong. That may not be intentional all the times. So those kind of mistakes are called errors, unintentional mistakes. So fraud is intentional mistake. Error is unintentional mistakes. Okay. So, but the auditor should ensure all the errors, the financial statements are free from any kind of misstatement, be it a fraud or error. And the next set of objectives in the first one is to express an opinion. Whether the financial statements are in all material aspects in accordance with the applicable financial reporting framework. Oh my God, another new term. No worries. It's very simple to understand. So, expressing an opinion is nothing but he has to write a written audit report that, yes, true and fair view of this financial statements. Fine, very good. So what is the applicable financial reporting framework? Framework adopted in presentation and preparation of financial statements based on the nature of entity. For example, basic example, how will the companies prepare the financial statements? Based on the Schedule 3 of the Companies Act 2013. So simple. For companies, the applicable financial reporting framework is Schedule 3 of Companies Act. Likewise, for separate entities, for RBI, for banks, RBI will be stating the applicable financial reporting framework. And for telecom industry, the Telecom Regulatory Authority will be stating the applicable financial reporting framework. So, the auditor should ensure and express an opinion if the financial statements are prepared as per the applicable financial reporting framework for that particular entity. Got it? So applicable financial reporting framework means framework used for preparation and presentation of financial statements, which is based on the nature of entity. Got it? So yeah. So now we have understood the difficult terms involved in this AC 200. The second set of objectives is to report on the financial statements. Of course, you have to express your opinion in the form of a report and to communicate as required by the essays in accordance with the auditor's finding. Based on the auditor's findings, the auditor's evidence or the auditor's work, he has to communicate that to the management, the shareholders, the users in the form of an audit report as required as per the directions of the standards on audit. Very simple. Okay, so SA 200 standards on auditing is the overall objectives of independent auditor. So what are the objectives? To obtain reasonable assurance about whether the financial statements as a whole are free from material misstatements whether due to any fraud or error, and to express an opinion on whether the financial statements are in all material aspects in accordance with an applicable financial reporting framework. And the second set of objective is to report on the financial statements and to communicate as per the essays in accordance with the auditor's findings. Yes? Are we good? Yes. So you have seen the meaning of each and every term. Okay. I'll just give a pause because I need to drink water. Okay. So the next topic that we will be discussing is the scope of audit. Scope of audit. What do you mean by scope? You might come across the term scope in many of your subjects in CA Inter. Yes or no? So what is the scope of audit? Okay, not the scope of audit. I will be teaching you that. So what is the meaning of scope of meaning of scope? Scope is nothing but a range of something. So what range does that particular subject or does that area, does that particular thing cover? So what all the aspects is covered under the audit is nothing but the scope of audit. Okay. So what is the scope of audit? The scope of audit we have divided into two parts: what is included and what is not included in the scope of audit. So the first thing that we will be learning is what is included in the scope of audit. Okay, so what is included in the scope of audit? Number one, coverage of all aspects of entity relevant to the financial statements. Coverage of all aspects of entity relevant to the financial statements. So the auditor needs to ensure that he is covering all the aspects, all the areas in the business organization which are relevant to the financial statements. Example, the sales, the purchases, the inventory, the cash transactions, the bank reconciliation statements, everything, the rental agreements, what all the aspects which are relevant to the financial statement should be verified. Which are not relevant to the financial statement, you don't need to verify that, you don't need to go there. Got it? So, auditor shall cover and verify all the aspects of the entity relevant to the financial statements. He has to cover everything, not a particular set of transactions. Okay, this is a this is a manufacturing entity. If we just check the production records, and if we just check the procurement of raw material and conversion of raw material and selling of the finished goods, that is enough. No, you have to check all the aspects which are relevant to the financial statements. For example, in the financial statement, there is a transaction called rent paid. Okay, rent paid is there. Rent paid might not be relevant to the production process, but it is relevant to the financial statements. So, to verify the rent paid, what do? You will go check the rental agreement. So, as per this rental agreement, to whom is the rent paid? So, what is the contract timing? What is the contract period? What is the agreed amount of rent? So, that should be verified. Likewise, every aspect which is relevant to the financial statement should be covered in the audit procedure. Got it? And the second scope is reliability and sufficiency of financial information. Reliability and sufficiency of financial information means he has to check whether the evidences and the financial information which is supportive to the financial statements is reliable. That means, can we depend on that? And sufficient. Is it sufficient to check this? Is it sufficient to state that the financial statements are correct or not? So it should be also covered in the audit procedure. So whether all the accounting records and the source data and bills, source data like bills, vouchers, documents, etc. are reliable and sufficient. Reliable means, can we trust that? Can we depend on this evidences? Sufficient means, are they sufficient to check that it is true or not? And for the purpose of the preparation of the financial statements. So how will we check if it is reliable or sufficient? Number one, we might check the accounting systems. Accounting system means how you prepare your financial statements, like based on cash basis, or it is accrual basis, or the accounting system means we can go in another perception, like what kind of software it is using. So It is subjective. Okay. So what is the accounting system that is prepared? So as per this accounting system, is the evidence sufficient or not? And what are the internal controls? Internal controls means how the organization is monitoring and directing the works as per the objectives of the organization. So is it operating in a strong internal control system or not? If yes, what kind of internal control systems? So this all internal controls and all will be discussed in detail in chapter 3. You don't need to worry even if you don't know the meaning of internal control. Simply internal control means all the procedures like how you monitor, how you direct, how you control your subordinates or the people that you work, to directing them towards the objectives of the organization. So as per the internal controls also, you will be verifying if the audit evidences are sufficient and reliable or not. And next thing is, you will be conducting procedures, tests and inquiries like normal procedures. For example, there is a sales transaction. What you will verify? The sales invoice. The sales invoice should be tested and the sales invoice should be verified. And you might go to the some few of the biggest customers and you will make some inquiries. Is the sale really made to you or not? So that kind of inquiries and tests will be done to check if the evidence is sufficient and reliable. Okay, so the second thing that is included in the scope of audit is reliability and sufficiency of financial information. And the third one, the last one, what is included in the scope of audit is proper disclosure of financial information. So what is it? All the accounting policies followed should be disclosed, and all the disclosures to be made to meet the statutory requirements should also be done. All the disclosures. What is the disclosure? Means what? Writing down in the financial statements, or recording means you will be recording in the accounts. Disclosure means you will be disclosing in the notes to accounts. As per this law, as per the Companies Act, you need to disclose few things in the the notes to accounts. Are these disclosed or not? Properly and clearly disclosed or not? And for example, the prior period transactions, you might be coming across these in your accounting paper. Prior period transactions, few transactions you don't need to record in the books of accounts, but rather you should disclose that in the books of accounts. So are these kinds of disclosures made properly or not? And accounting policies means the rules and regulations that you follow for preparation of the financial statements. Yes or no? Like few policies that you can take is methods of depreciation, methods of inventory valuation. So what method is followed? Is it followed consistently or not? Is it followed as per the statutory regulations or not? And what are the methods of inventory valuation? For this month, I will follow FIFO. For the next month, I will follow LIFO. Will this be proper? No, right? The proper disclosure is issued. Are the accounting policies followed consistently or not? If followed, is they disclosed in the financial statements or not? That should be verified by the auditor. It will come under the scope of audit. Simply, all the disclosures that you need to make relevant to the financial information in the financial statements is made or not. Is verified by whom? Auditor. Got it? Yes. So the three things that are included in the scope of audit is, number one, coverage of all aspects of the entity relevant to the financial statements. Yes. And reliability and sufficiency of the financial information. And the last one is proper disclosure of the financial information. Okay. And the next thing that we will be seeing is scope of audit. What is not included? We have seen what is included. We have to see what is not included. Yes. Yes. Let's get started. So, scope of audit, what is not included? Number one, the auditor. The auditor is not expected to perform duties which fall outside his competence. For example, Mr. X. Who? Mr. X. Yeah. So, Mr. X is the auditor of Tata company. Okay. Example. So he has gone for inventory valuation, that is the stock audit. Stock audit, for the purpose of stock audit, he went to the factory of the Tata Motors. Fine. So just to know, he is eager to see the machinery used and involved in the manufacturing of the cars, and he went to that side of the factory where he has seen the machine which is involved in the manufacturing of cars. That's fine. After 1 week, there is a news that that particular Tata Motors branch factory caught fire and it has blasted. Now they're blaming that mistake on the auditor. They are saying that the auditor has gone to that machinery part, and that machinery is the main reason for this blast. So it is the default, I mean, it is the mistake of the auditor that he did not check the machine is properly working or not. Hurry. Is it the auditor's responsibility to check the condition of the machinery? He just came there to see the valuation. I mean, to do stock audit, to verify the number of inventory physically present and the opening balance or the closing balance is matching or not. That's all. So, the auditor is not expected to perform the duties which fall outside his competence. Like seeing the physical condition of the machinery, you can't say if it is working or not. You're not engineer, you're not mechanic, you're just a CA. Being an auditor, you have to know the knowledge of many subjects. This is enough. You are not, don't expect us to check the physical condition and the status of the building and all that stuff. Okay, please. So the scope of audit will not include that the auditor is not expected to work out of his competence. Out of his competence, example, checking the physical condition of the assets and the building permissions, the sand to cement ratio, is it proper or not? This is all not verified by the auditor. Okay, so auditor is not expected to perform duties which fall outside his competence. And the next thing, auditor is not expert in authentication of documents. So auditor's work is, okay, check the books of entries. Now sales transaction is there, and then purchase transaction is there. Okay, this person has bought this asset, this land is bought by the company, purchased by the company. So what is the sufficient evidence? Then he will go to the management. He will ask this, give me the sales invoice, give me the purchase invoices, give me the material received note. So the management will submit supportive evidence. So is it the work of the auditor to check if these documents are original or not, if the documents are fake or not, if the documents are fabricated or not? Is it the auditor's job? Means no. Auditor is not an expert in authentication of the documents. To verify if this document is authenticate or not is not auditor's job. So if the management submits a fake or a fabricated document, and based on that fabricated document, the auditor has performed the audit, that is not the fault of auditor, because his work is not authentication of documents. The maximum the auditor can do is go verify the transactions and ask the supportive evidence for the transaction and compare the entries and the supportive evidence and write the report. That's all. His job is not to check if the signature is forged or not, if the document is authentic or not. So he is not an expert to authenticate the documents. Okay. And the third thing which is not included is audit is not an official investigation. Audit is not an official investigation. How, madam? Many of you think that as you read, audit is a verification of financial statements. Many of you will imagine that audit means just flung open the door with black coats, with white shirts and the goggles, and you will be giving directions to management. Open this thing, crash this door, break this wall, check everything. This is not audit. That comes under investigation. Audit is simply, they will be inviting you to the company to verify some documents. You will just sit in some room and you will start verifying. They will throw that bunch of financial statements and books onto your face. You will start verifying. So audit is not an official investigation. Investigation means if something wrong or something fraud has been reported, some complaint has been reported on to the company, then some regulatory authority will go, will send some few specialized people in that field, and that people will investigate on that particular matter where that wrong has happened. Okay, that is investigating. Investigation means for some specific field, for some specific transaction, or for some specific area of that entity will be detailedly investigated, detailedly verified to find out the mistake, and to find out the wrong has happened or not. That is not audit. Audit is something generally done to all the aspects of the financial statements to verify if it is correct or not to search something wrong. Got it? So audit should be verified from investigation. Sorry, audit should be differentiated from investigation. Two are completely different. Got it? So investigation means critical examination, very stringent examination with very strict rules and regulations. And the scope, the range is very narrow. One such particular thing only will be investigated. It's narrow and specific. Whereas audit is obtaining the reasonable assurance. Just assurance is enough. If something wrong is not verified by the auditor, auditor means he is giving reasonable assurance that the financial statements is portraying true and fair view or not. Whether the financial statements are free from material misstatements or not. This is the work of auditor. Okay, is not investigation. And the scope of audit is general aspects of all the financial statements have to be verified, and the scope is broad and wide. Got it? Yes. So what is included in the scope of audit is coverage of all aspects of the financial all aspects relevant to the financial statements, and reliability and sufficiency of financial statements, and the last one is the proper disclosure of the financial information. And what is not included in the scope of audit? Scope of audit is auditor is not expected to work outside his competence. And the next thing, auditor is not an expert in authentication of documents. And the last one is audit is not an official investigation. Got it? Yes. We have seen what is included in the scope and what is not included in the scope. And the next thing that we will be discussing is inherent limitations of audit. Because of these inherent limitations, because of this disadvantages of audit, we can't provide absolute assurance regarding the financial statements. Got it? So what are these inherent limitations? Number one, the nature of financial reporting. In financial reporting and preparation and presentation of financial reporting, the management who prepares the financial statements will draw few estimates of accounts. Like, for example, provision for bad debts, provision for taxation, contingent liabilities based on some litigation, some legal complications or what, you will be writing few liabilities which may be occurring in the future or which may not occur in the future. That is the meaning of contingency, right? Uncertain, based on some uncertain event. You might win the case or you might lose the case. So if you might win the case, you might not be getting that liability. But if you might lose the case, you will be getting that liability. So that is an estimate. The nature of financial reporting is that few aspects of entity, few aspects of financial statements are to be recorded based on estimates. So if the management itself is recording that as per estimates, how can the auditor assure that the estimates are 100% correct? Because estimates are subjective. You might think that 10,000 rupees in the provision for bad debts is okay, proper. But the auditor's perspective, not 10,000. You need 1 lakh provision. So that is subjective as per the human psychology and nature of the entity. Got it? So that subjective matters and the estimates can't be given 100% assurance. 100% assurance. Got it? So financial statements are prepared as per applicable financial reporting framework and based on which few aspects are recorded by the entity by its own judgment of management. So like example is the accounting estimates. So that estimates can't be given 100% assurance. So the first inherent limitation of audit is, go on. nature of financial reporting. And then number 2, nature of audit procedures. How the audit is conducted, sampling basis. Each and every transaction is not checked, yes or no? So if each and every transaction is not checked, how can you give 100% assurance? That is a practical limitation. Practical limitation, all the entries and evidences are not verified, yes or no? So the practical limitation is that all the entries and evidences are not verified. Only few of them based on the sampling is verified. So how can you give assurance? How can you give absolute assurance? So this is the reason for no absolute assurance. Got it? And the legal limitation. One of the legal limitations is that the management can provide fabricated documents. You have seen the work of an auditor is not to see if the documents are authentic or not. So if he can't see that the documents are authentic or not, how can he give 100% assurance? The management can submit fake documents, yes or no? So if that possible legal limitation is there, then can you provide 100% absolute assurance? So that is one of the inherent limitations of audit. That is the nature of audit procedures. And the next limitation is audit is not in the nature of investigation. If it is in the nature of investigation, each and every aspect will be verified. Yes or no? Each and every aspect will be verified, and the main thing in investigation is to finding out something wrong. But the nature of auditing is not that. It is not investigation. It is a general thing. Just for the purpose of reasonable assurance, audit is conducted, verified, and all the evidences will be verified. If the evidence is true or not, if the evidence is fake or not, that is not the work of an auditor. So that is why he can't obtain absolute assurance. And the next thing is timeliness of financial reporting and decrease in relevance of information over the time. So audit, for example, in your law, you might have studied that audit is a 5-year job of an auditor. Yes or no? So the auditor has done a lot of hard work and he has obtained a lot of evidences. For example, for the transaction of purchases, he has checked almost like 50% of the purchase transactions and 50% of the evidence of the purchase transactions in the first 2 years. In the first 2 years, he has verified. Fine. And then he is using the same evidence that he has obtained for the first 2 years for writing the report for 3rd year and 4th year and 5th year also. So in the same field of transaction, for example, the purchases only, new frauds can obtain, right? Yes or no? New frauds can come up, new evidences can come up in this 3rd, 4th and 5th year, right? So that is the inherent limitation. Like timeliness of financial reporting. On time, you have to submit the audited financial report, audited financial statements. So in this 5-year, you might think, oh my God, 5 years is a very long time. You can check 100% of the transactions. No, my dear. 5 years for just verifying 1 year of the financial statements is a long time. But for 5 years, number of transactions are entered non-stop. So each and every transaction can't be verified. So the first year evidence will lose its value till the last year of the audit period. Yes or no? So the timeliness of financial reporting and decrease. Sorry, I'm just using the eraser, I think. Yeah, and decrease in the relevance of information over time. So over time, the relevance and the need and the importance of that particular information previously might not exist. So that is the inherent limitation. And the 5th one, the last inherent limitation is that future events. Can the audit assure about the future? Can the audit or the auditor assure about the future of the company? Can the auditor assure that the company is performing very well, the operational results are true, and we can expect the company to go on for more 5 years. Company is going concern and will stay forever. Can this be assured by the auditor? Of course not. Because some of the other sudden adverse effects can. Main example, anyone can say this, COVID-19. Very well performing firms have been shut down due to COVID-19. So can this be expected by auditor? Can he give assurance about the future of the entity? No. So that is why he can't provide absolute assurance and he can't provide assurance about the future of the entity. Got it? So what are the inherent limitations of audit? Number one is the nature of financial reporting. Some of the aspects in the financial reporting are based on estimates. So the estimates can't be given 100% assurance. So that is the limitation. The second one is the nature of audit procedures. Nature of audit procedures, audit is done through sampling. So in sampling, we can't check each and every transaction. So we can't provide 100% guarantee. And the second thing is the legal limitation. Legal limitation is that maybe the evidences are fabricated, maybe the evidences are fake, which is given by the management. So that is not the work to authenticate. That's not the work of the auditor to authenticate the documents, right? So that is one of the limitations of the audit. And the third one, audit is not in the nature of investigation. If audit is an investigation, then we can give 100% assurance. But audit is not an investigation, it's general verification. So that is the limitation. And the timeliness of financial reporting. The value of an evidence in the starting of the audit engagement may not be of the same value at the end because new frauds might occur. So timeliness of financial reporting and decrease in the relevance of financial information over time. And the last one is future events. Audit cannot assure about the future. So that is the inherent limitations of the. And the next thing. So everyone will face this question. Everyone will get this out. Is audit mandatory or voluntary? Mandatory means what? Voluntary means what? Mandatory means compulsory. Voluntary means your wish. If you want to get your books audited, you can get your books audited. If you want, it's your wish. Our wish. Okay? Mandatory means you have to get your books audited. Okay? So, in India, companies should get their financial statements compulsorily audited. It is the rule. You have to follow. But whereas, if we are not companies, if we are not registered under the Companies Act 2013, it's not mandatory for us. In income tax, you might have come across the section 44A in BGB. So that states that some persons who will cross the threshold limit of the turnover should get their books audited. Yes or no? So that persons also should get their books mandatorily audited. And for all the benefits of the audit, other individuals will get their books audited. What are the benefits of the audit? We will see. So, the next topic that we will be discussing is the benefits of audit. We have seen that audit is voluntary for some people and mandatory for some people. So, some people will get their books audited for benefits of audit. So, what are the benefits of audit we will see? So the first one, audited financial statements provide high quality information which provides confidence to users. Why is the audited financial statements a high quality information? Because it is done by a CA who is a professional, who is a chartered accountant, who has professional knowledge in the fields of every subject related to the financial statement. He is verifying and he is stating that the financial statements are portraying a true and fair view of the operational results and assets of liabilities. That means it is high quality information. If you will give this high quality information of audited financial statements to the users, it will be a good reputation for your company. Yes or no? To your entity. So that is one of the benefits of getting your books audited. And next, audited financial statements provide assurance to the shareholders that the management is providing qualitative and reliable financial information. Shareholders are not involved in the daily affairs of the company. Who is involved is the management. Shareholders will have a doubt, like, is the management conducting the affairs of the company properly or not? Is the management showing true and fair view of the operational results or not? Are the assets and liabilities shown in the books of accounts true or not? How come the shareholders will believe the management blindly? So, to protect the interest of the shareholders, it is mandatory, it is beneficial to get the books audited. Got it? Yes. And Moral check on the employees. Who will prepare the financial statements? The employees under the directions of the management will prepare them. If the employees know that this particular financial statement which is prepared by them is verified by a professional, will it be a scary thing for them or not? They will be scared. Oh my god, they will point out some mistakes. Maybe we might lose our jobs if we do something wrong. So that kind of scare, that kind of fear is there in them. Yes or no? So audit will be a moral check on employees. Like, are the employees working efficiently or not? Are the employees being involved properly or not? So that is verified or that is checked by audit. Okay, and audit, one of the benefits is it will detect the frauds and errors. Okay, it will detect the frauds and errors during the process of audit, and it will point out the deficiencies. If there are any deficiencies, you might have followed this internal control, you might have followed this way of preparation of financial statement, then it would be then it would make the presentation much more good. The presentation of the financial statements may be much more effective and much more interesting for the users. So it will point out few deficiencies, and that deficiency can be considered, and it might make the presentation way better from the next step. Got it? And they are helpful. Oh my god, I keep using the eraser. They are helpful for government authorities, bankers, lenders to make decisions. Why are these helpful for these people, madam? Why not, my dear? Government authorities, for the purpose of giving grants or for the checking the true tax liability of, how is the tax liability verified by the assessing officer? First, he will check the profit or the amount that is taken as the base to come to the taxable amount. Yes or no? Is that base taken from the audited financial statement? If yes, that the authority can trust. Yes or no? That is kind of a confidence to the authority also. If the profit that has been taken from the from audited financial statement is the base for the tax liability, then that provides assurance or confidence to the government authority. So that is the benefit to government authorities because of the audit. And bankers or lenders or other financial institutions to give loan or not, to decide the credibility of the entity or not. So that is also verified based on the audited financial statements. So these are the benefits of audit. Number one, it provides high quality information, and it is giving assurance to the shareholders, and also it is the moral check on the employees, and detects frauds and errors and points out the deficiencies. And the last one, it is helpful for government authorities, bankers, lenders, financial institutions to decide the credibility of the organization. So these are the benefits of the audit. And the last topic that is left out in this chapter number 1 is the new topic which is entered into this chapter, that is assurance engagements, and the meaning of the word engagement. It's a very simple topic, but don't think it is a complicated topic. I'm there here to simplify that. Okay, so let's follow this engagement thing. Okay, let's give the mic a little. Fine. Okay, let's start with the next topic, which is engagement. What do you mean by engagement? The first thing that comes in your mind is, oh my god, when will I get engaged? Or the diamond engagement ring. Come out of the dreams. Come back to audit class, my dear. Okay, we are in first chapter. Okay, so engagement means formal agreement between two persons. Yes or no? Even if it is a wife and husband, it is an agreement, and it is like I have क्या बोलते इसको? Like I have taken you. You are reserved. Yes or no? You are reserved. You can't go anywhere. That is why you do engagement before marriage. You are reserved. You can't go anywhere. Your engagement is done. So likewise, engagement in audit terms is also like that only. It is a formal agreement. It is a formal agreement between two persons. What are the two persons? That's why we learn. If we are learning audit, the two persons means one person is auditor, another time. One person is auditor and the other person is client. The client may be a company, firm, or LLP, or any business entity. Yes or no? Yes. Formal agreement. It is not an informal agreement. Hey, I will do audit for you. That's fine. Yeah. This is informal. It's not written. So formal agreement means written terms and registered terms. So formal agreement between two persons, auditor and the client. Client, in which, what happens in that formal agreement, in which the auditor agrees to provide auditing services to express an opinion. What is he agreeing? He is assuring. In Indian contract that you have seen. Contract means agreement plus enforceability by law. Agreement is done by two persons. One person promises to do something and the other person gives consideration for that. Likewise, here auditor is promising that yes, I will provide you auditing services and I will provide I will express an opinion on your financial statements. And in return, the client is providing some audit fees. That is so simple. Agreement between auditor and the client. Auditor will agree to provide auditing services. Engagement. So the written document for this engagement is nothing but engagement letter. Simple. Engagement letter. In this engagement letter, we will see the terms and conditions which are applied to the audit and responsibilities of auditor, responsibilities of the management, and what is the agreement, what kind of agreement did the auditor provide. That is the thing which is contained in the engagement letter. So what is engagement? Engagement means formal agreement between two persons. Who are those? Auditor and client, in which the auditor agrees to provide auditing services to express an opinion there. So, very good. Now, let's see the new topic, which is assurance engagements. Assurance engagements. So, before I tell you, first we will read what is there here. Okay? Means an engagement in which a practitioner, we didn't see the term audit here. New term has practitioner, which a practitioner gives an opinion about specific information that enhances the confidence to the intended users to make decisions. Okay. So, in this engagement, in this agreement, there is a practitioner. The practitioner will verify some specific information, and he will express an opinion on that specific information, and that opinion is providing confidence to the intended users to make decisions. Is it similar to audit engagement? Yes or no? Replace the practitioner with auditor. Replace the specific information with financial information. And replace the intended users with the users of the entity. Users of the financial information. Audit engagement. So, audit engagement is also one kind of assurance engagement. In general, assurance engagement means one practitioner, a person who is a professional, will do verification on some specific information and he will express an opinion. Is that specific information correct or not? Is that specific information containing a fraud or containing an error or not? Is it free from mistakes or not? He will express such opinion, and that opinion will provide some kind of confidence to some intended users. Intended users means for whom that verification is done. So that is assurance engagement. The word is only telling, it is providing some assurance. For the purpose of providing assurance, you are entering into that engagement. Engagement means agreement. Okay. So there are three parties involved in assurance engagements. And number one is the practitioner. That practitioner may be an auditor, maybe an expert, maybe a CA who is holding the certificate of practice, COP. Who gives this certificate of practice? Membership certificate. Who gives this membership certificate? ICAI, regulatory authority. Yes or no? Yes. Next, The second party is responsible party. Who is this responsible party? The person who is preparing and presenting the financial statements. The person who is hiring the practitioner. Nothing but your entity, company, firm, LLP. These all come under the heading responsible party, whose responsibility is to prepare and present the specific information. Got it? The third party is intended users. Intended users. Users who makes the decision based on these reports. Users who makes the decision based on these reports. So the first party is practitioner. Again, eraser. I'm so okay. Practitioner. Number one, practitioner. Number two, responsible party. Number three, intended users. Got it? So these are the three parties involved in the assurance engagement. There is a theoretical question asked behind the first chapter in your ICAI material. Who are the three parties involved in the assurance engagement? Explain in detail. So just simply write about the practitioner who performs the assurance agreement, and the responsible party who is the person who gives that specific information and asks them to get the assurance. Nothing but who prepares the presentation of the preparation, who prepares and presents the financial information. Example is a company or a firm or a proprietary concern or a society or a trust or an LLP. Correct? And the third party is intended users, for whom the specific opinion is expressed. Who will use this specific information, specific opinion to make decisions. Okay? Next, types of assurance engagements. What is it? Types of assurance engagements. Just give me a moment. Yeah. Let's see the types of assurance engagements. So, assurance engagements means just entering into an agreement to provide assurance on some specific information to the intended users. So, the first kind of assurance engagement is reasonable assurance engagement. So, okay, I didn't tell you this. Based on the first category is based on the historical financial information. I forgot to tell you. So, what kind of information is the audit done on? Financial statements. Yes or no? How will the financial statements prepared? Is prepared based on the past data from the starting of the year. From the 1st April 2024 to the 31st of the March 2024, some transactions have happened. Some transactions have happened. Some financial information is involved. Based on this past financial information, presently you will prepare the financial statements. Yes or no? Likewise, the audit also is done on the historical financial information, the past financial information. So, audit is generally done on historical financial information. No auditing for future financial information. Projected financial statements will be there. No, you will be submitting for loans. Example, if you want a loan for expansion, what you will do? You will submit the future financial sales, future financial information. Future financial statements will be provided to that particular bank or the financial institution as a proof about your company, and you will apply for the loan. Audit is not done on that. Audit engagements is for verification of the historical financial information. Now, what the meaning of the historical financial information? Just a moment. Yeah. So now, first category is based on the historical financial information. This assurance engagements, these kind of assurance engagements are assuring about something which is the historical financial information. Only financial information, that too historical financial information. And so the first kind is the reasonable assurance engagement. Reasonable assurance. Where did we come across this term? Overall objectives of auditor, essay 200, to obtain reasonable assurance. Yes or no? So, first type is reasonable assurance engagements, where the auditor will provide high level of assurance. High level of assurance. Yes? And here, in this type of assurance engagements, extensive procedures are followed to obtain evidences based on which reasonable assurance is provided. In this kind of assurance, the responsible party, the company or the firm, will provide you, will agree with you that you have to verify this financial statements. These are the books, these are the supportive evidences, and you can start your audit procedure. You will verify each and every book entry, each and every financial statements, transactions, and each and every supportive evidences. Yes or no? You will be checking everything in detail. You will be checking if the evidences are sufficient or appropriate or not. Everything will be checked in detail. Extensive procedures will be done in this reasonable assurance engagements. Even if it is a reasonable assurance, it is a high level of assurance. Yes or no? Yes. So, high level of assurance will be provided in this type of assurance engagements. Reasonable assurance engagements. One of the popular example is simple, my dear, audit engagements. What happens in audit engagements? Extensive procedures will be conducted by the auditor. Each and every evidence will be verified. Each and every evidence is sufficient or reliable or not will be verified by the auditor. Yes or no? Yes. So, reasonable assurance engagements, example is audit engagement. And the second type of engagement, which comes under the category which is based on the historical financial information, is limited assurance engagement. The word is having limited. That means it is providing lower level of assurance. Yes. So it is providing lower level of assurance. Lower level of assurance means very limited assurance. Means it is less than reasonable assurance. That doesn't mean very low assurance. Not. It is less than reasonable assurance. Okay. So what kind of engagements will provide lower level assurance, madam? So this kind of assurance, like, for example, you appointed an auditor or you appointed a practitioner who is a qualified CA, and you have appointed him to verify half-year financial statements. Please verify this half-year financial information from 1st of April to particular September of 31st September or something or the other. 6 months ka data you have to verify. Please verify this and you just tell me if there are any mistakes or not. Just please review the financial statements. So what kind of engagement is this? Now in this engagements you are not asking him to verify each and everything. You just gave some interim financial information which is not finalized. Interim means in between the year you have given maybe half year data or that particular quarter's data. Yes or no? So here fewer procedures are conducted to draw conclusions. What kind of conclusions? So opinion is expressed. Assurance is given that okay, this financial statements that you have given, this financial information that you have given is free from material misstatements. I have done very few procedures. Yes, what procedures? Very few procedures. Yeah. So, very few procedures have been conducted to draw conclusions. Example will say, you have been appointed to verify this quarter's financial statements, and you have just given few evidences. And you just they have just appointed you to verify them on top. Like just apply few procedures and just verify them. You don't need to go deep inside and check all the frauds and errors. So you just verify. That's all. So this kind of assurance is asking for limited assurance. They're not asking 100% or high level assurance. They're asking just give us limited assurance that we have done properly or not. We have done all the financial information as per the applicable financial reporting or not. That's all. Very fewer procedures are conducted. Okay. So each and every evidence, is the evidence proper or not? Go verify physically, stock. Nothing is involved in this like this. So the example and the main thing for limited assurance engagement is review engagement. Review. Just review. No need to audit. Just review. Okay. Just check the financial information. Just give a review on top. And is the financial information prepared as per accounting standards or not? Just like that. So limited assurance engagements example is review engagement. Yes, review engagement. Just providing a lower level of assurance. Extensive procedures, supportive evidences, physical verifications, all these procedures are not done in limited assurance engagements. The practitioner or the auditor is just appointed to provide assurance, that to limited assurance about some particular specific financial information, not the whole financial statements. Got it? And the next type of assurance engagement is based on other than historical financial information. This limited assurance engagement and reasonable assurance engagement is providing assurance on past data, historical financial information. Okay, not present data, historical financial information, financial. Listen carefully. Historical financial information. On this kind of information, if you are providing some kind of assurance, then those are called, maybe it is a reasonable assurance engagement or limited assurance engagement. And the next category of assurance engagements is other than historical financial information. So other than historical financial information, it may be a financial information or it may be a non-financial information. Yes or no? It may be a financial information or non-financial information. What kind of financial non-financial information that we have to provide assurance about, madam? We will see. So, for example, let's see first example we will see for financial information. Okay. So, for example, prospective financial information. What is prospective financial information? Projected financial information. Future financial statements. Future financial statements, projected financial statements that you submit for the loan. Now you're asking bank that I need a particular amount of loan for expansion of the business. These are the results that I will get in the next 5 years. These are the estimated prospective financial statements that I've prepared for you. Please review this, and based on this, you should give me a loan. You have went to the bank and you have asked like this. That's fine. So will the bank blindly trust the prospective financial statements? No. The bank will also ask you to get that prospective financial statements verified by a professional. Now, if you appoint a practitioner or a CA or an auditor to verify this prospective future financial information and give me assurance if this is correct or not, then it is called, such type of engagements is called assurance engagements. Okay, such type of engagements is called assurance engagements. Those are based on other than historical financial information. Which is the financial information? Example is prospective financial information. Very simple, my dear. If you are asking a practitioner or a CA or an auditor to ask or to verify my future financial statements are these. I have made some estimates and I have made some financial statements for the future to obtain some loan for the expansion. Please verify this and give your report on this prospective financial statements. So if you are entering into such type of engagements with the practitioner, those are called assurance engagements. Here, we have seen the types of assurance engagements. So these high-level assurance are called reasonable assurance engagements. Low-level assurance engagements are called limited assurance engagements. So this financial information and non-financial information other than historical financial information engagements are called what? In general, these are called assurance engagements. Okay. These are called, I will write it for you. These are called assurance engagement. In this type of engagements also, you are providing assurance. You are providing what? You are providing assurance. Got it? I think you can't see the end of the charts. Wait a minute. Yeah. So, where are we? Yeah. We are in categories of assurance engagements other than historical financial information. Other than historical financial information, maybe it is a future financial information or it is a non-financial information all over. Okay. So this kind of engagements is called assurance engagements, and these provide moderate level of assurance. Why moderate level of assurance? Why can't we provide high level of assurance? How can we provide high level of assurance on future estimates? The management itself is drawing these projected financial statements based on estimates. So how can we even give assurance that these estimates will 100% occur? We have seen the inherent limitations of audit, yes or no? What is it? We can't provide assurance on future events. So that is why even reasonable assurance also can't be provided on future events. That is why we are giving moderate level of assurance. Correct? So don't go deep inside this. Very simple. Other than historical financial information, that is maybe a financial information which is of future or non-financial information, you can provide only moderate level of assurance because these are based on estimates. We will see an example for non-financial information. You have been appointed to verify the internal controls of the company. Internal controls means what? See, how the organization's resources, organization resources means the labor, the money, the raw materials, whatever it is, the resources are directed, monitored and measured. How are they directed? How are they monitored? How are they measured? How are they controlled? All these comes under internal control. The various procedures, the various hierarchies, the various authentications, the various, practical procedures, like for this particular procedure, you need the signature of this particular individual. Without the permission of this particular individual, you can't enter into this agreement. You can't purchase the material. You can't order the material. You can't sell this particular product. So these are the few examples of internal controls. To verify the strength of the internal control, you might appoint a auditor. To give that specific person is appointed to provide some assurance that yes, the internal controls are strong, the internal controls are good enough for this particular entity or okay. So the objectives of organization are met effectively and with efficiency by complying all laws and all laws, regulations and policies. So these are the internal. To verify these also, you will be appointing a practitioner. So these kind of engagement, these kind of agreements are called assurance engagements. Okay. So what are the three kinds of assurance engagements? Reasonable assurance engagements, limited assurance engagements, and the third one is assurance engagements. The name is assurance engagements only, but they provide moderate level of assurance. So, example of reasonable assurance engagement, audit engagements. Example of limited assurance engagements, review engagement. Example of assurance engagements, this prospective financial information engagements and internal controls, non-financial information, like this. Correct? As a whole, this based on this financial information and non-financial information, these engagements are called assurance engagements. Got it? Yes. The standards we'll learn later. Now only, don't worry, wait. So the next topic that we are entering, one of the last topics left out in this chapter 1, we will be closing the session after this. We will be done with chapter number 1, the basics of auditing. Okay? So the last topic is various engagement standards. What is engagement? Agreement and the rules and regulations to be followed by all the parties entered into this agreement are mentioned in the standards, rules and regulations to be followed, procedures to be followed. So who will give the standards? These are issued by the authority of council of ICAI, our institute. Deal with the duties and responsibilities of auditors and practitioners. So standards will deal with the duties and responsibilities, not rights. Standards will not give any rights. Standards will state the duties to be mandatorily followed by the auditors and the practitioners. Got it? Rights are different from duties. You might have learned the rights and duties of partners. Rights means, yes, I can do this. This is my right. No. Rights are not mentioned in standards. Duties means, yes, I have to do this. This is my duty. Got it? Yeah. So standards will state the duties and responsibilities of auditors and practitioners. So what are the standards that are given by ICAI? Number one, standards on auditing. So in the types of engagements, you've seen reasonable assurance engagement. Those are audit engagements. So to regulate these engagements, what are the standards prescribed by ICAI? Standards on auditing. Yes, standards on auditing. Apply for audit of historical financial information only. Yes or no? Based on historical financial information, we have categorized reasonable and limited. So application of standards on auditing is done on historical financial information, and high quality benchmarks to be followed by the auditors. Benchmark means one standard. Okay, benchmark means, for example, you have done audit following all these procedures as per the standards to that particular entity. So that is as a benchmark. Based on this, you have to follow for other entities also, like that. Okay, and issued on various aspects. So what kind of aspects will the standards touch? Objectives, how to document the audit, how to procure the evidence of audit, what is the audit sampling, everything, etc. Lots and lots of standards are given. Okay, everything need not be studied, don't worry. Okay, you might be scared. Oh my God, we are learning SA 200. That means we have to learn 200 standards. No, my dear, very less standards are there, but that standards are only large. Okay, so first engagement standards we have seen is standards on auditing, which is to apply for historical financial information, and it is like a high quality benchmark, a standard which is set, that has to be taken as a reference to perform the audit. Okay, and it is issued on various aspects like objectives, documentation, evidence, sampling, report, everything. Okay, and it is mandatory to follow SAs. It is not your choice. It is not voluntary. You have to follow. Mandate. And the second type of engagement, second type of standards on engagement. Second type, what we have written types. Limited. So here, audit engagements, what standards we have to follow? Standards on auditing. Here, review engagement, what kind of standards we have to follow? Standards on review engagement. So the second type of standards here is standards on review engagements. Apply for review of historical financial information. Simple. Okay, those practitioners who are appointed for review of financial information, those have to follow standards on review engagement. And the next standard, sorry, why have I gone up? The next standards on engagements is standards on assurance engagements. The third kind of engagements we have seen is assurance engagements for financial information and non-financial information other than historical financial information. Yes or no? Yes. So the engagements other than audit and review, like to apply for examination of prospective financial information and internal controls, we have to follow standards on assurance engagement. So practitioners who are appointed to provide assurance for prospective financial information, and internal controls or other non-financial information should follow standards on assurance engagement. And the fourth one, standards on related services. Standards on related services. So, we have seen that assurance engagements are there. But auditors, CAs, practitioners may be appointed for other than assurance engagements. Till now, we have seen practitioners being appointed to give assurance on something. But maybe they might appoint these people for just doing some services. You don't need to provide assurance or you don't need to verify something. But please help me in doing this work. Please help me in giving these services. So these are non-assurance engagements, right? Even that is also a formal agreement. That means it's an engagement. But is the practitioner providing you any assurance? No. But he's helping you with some related services. Yes? So, example. If the auditor is appointed to provide bookkeeping services, or if the auditor is appointed to help you in presentation and preparation of financial statements, or for providing managerial services, or for providing inspection services, whatever it is, he is appointed not to provide assurance, but to help you do few things. So then it is called non-assurance engagements. It is called non-assurance engagements. And to regulate these, the ICAI has given standards on related services. Standards on related services. Got it? So, for audit engagement, standards on auditing. For review engagement, standards on review engagements. For assurance engagements, which is based on other than historical information, standards on assurance engagements. And no need to give assurance, but you are entering into an engagement to provide related services, other services. You have to follow standards on related services. Got it? Yes. Just a moment, I'll just erase this. Erase, sorry. Yes. The next standard. What is it? Just listen carefully. Okay. Standards on quality control. Provide guidance regarding a firms, not companies, not auditor. Auditors and auditors' firms responsibility for its system of quality control. What is quality control? How to conduct an audit with a quality, and review of financial information with a quality, assurance and review services, like any service, any kind of service, audit or review or any kind of assurance or services, these all needs to be provided with a quality. Quality means nothing. It's very simple. Like you have to apply many procedures. You have to apply internal controls. Internal controls like this work is allocated to this person. This person has to procure the permission of this particular person. Example C. System of quality control should be implemented in your audit firm. That means the engagement partners, that means the partners of the audit firms who are the qualified CAs and his team members, everyone should follow a quality control. For example, like every work, the quality control will say every work should be done with integrity. That means honesty. Every work should be done with the objectivity. That means we should not compromise the objectives of our audit. Every work should be done with independence. These are the various types of controls that you implement for obtaining quality in the firm. So that kind of system of quality control should be followed by all type of engagements, by all type of, all the firms which provide different engagements. Example, if that particular, just give me a moment, if that particular firm is giving the audit engagement services, review engagement services, assurance engagement services, or review services, all the persons here auditing or related services or assurance engagements or review engagements, everyone who is involved in this engagements should follow standards on system, standards on quality control, and they have to implement the system of quality control. Got it? So who is telling this? Who is telling this? SQC1. So SQC1 is stating all the auditors and practitioners are required to establish system of quality control in a firm, and the personnel means members of the engagement team. Members of the engagement team has to comply with that professional standards. What standards? Standards on quality control. All the practitioners involved in any type of engagement, be it audit engagement, review engagement, assurance engagement, related services engagement, all these practitioners and their team should follow this system of quality control and the standards on quality control. Very simple. Correct? Yes. Example of implementing this quality control is maintenance of integrity, objectivity, independence, everything. Okay? Yes. Now, the last topic. Why do we need standards? It's like, why do we need rules and regulations for writing examination? Of course, we need. Yes or no? Otherwise, who will perform? Who will be performing with honesty? No, right? So likewise, why do we need standards? Why do we need rules and regulations? Why do we need a regulatory authority to state us what should be done and what way? We will see why. Number one, ensure that audit is carried out as per the benchmark at par with the global practices. In the whole world, how is the audit procedure being conducted? That is set as a benchmark in the standards on auditing, and as per that benchmark, you have to perform various audit procedures or engagement procedures. So that is like, it is stating us the benchmark and it is asking us to follow that benchmark. So that is easy for us. If it is giving a reference, it is easy for us to do as per that reference. Yes or no? Yes. And the second thing, improve the quality of the financial reporting, helps the users to make wise decisions. Yes or no? If the standards are given, as per that standard, is everyone, if everyone is following as per that benchmark, which has happened very nicely, as per that benchmark, if you follow the auditing procedures, it will help the management to see the flaws of their financial statements. They will take into account that flaws and the deficiencies, and they will improve that financial reporting. So that way, it will help the users to make wise decisions. Yes? So audited financial statements, and also it will help the financial reporting. It helps the management to improve the financial reporting, and likewise, it will help the users to make proper wise decisions. And the next thing is to promote uniformity. Why uniformity? There are many qualified chartered accountants. There are many auditors to the companies. One auditor will perform audit procedure like this. One auditor will think that verification of this particular transaction is not needed. One auditor think that risk assessment procedures, what is the need for risk assessment procedure? I will not conduct. So, if one auditor, different auditors are performing different audit procedures, how can you compare the financial statements? How can you compare audited financial statements of different entities? You can't. So, in order to maintain uniformity and similarity between the procedures of audit for each and every entity, you have brought standards. So, every auditor should perform audit of financial statement based on the standards only. You can't go away from the standards. You can't deviate from the standards. So this will promote uniformity and this will enhance the possibility to compare to compare the financial statements, audited financial statements of different entities. Got it? And the fourth one is build professional knowledge and skills. So with the standards on auditing, the auditors will get professional knowledge on how to conduct the audit. The skills, like what are the ethics, what are the professional skills that we have to incorporate in ourselves to perform audit. These are also built into the auditor with these standards. And the last one is to ensure audit quality. To ensure that the audit will be conducted in quality with the standards, these professional standards have been brought in. Got it? So why do we need standards? In order to carry out the audit as per the benchmark and to improve the quality of the financial reporting and help the users to make wise decisions, to promote uniformity and to build professional knowledge and skills. And the last one is to improve the audit quality. Yes? Yeah. We have come to the end of chapter number 1. We've already seen the benefits of audit. So yeah. Shall we give a quick recap of that chapter number 1? If you do not understand any part of this chapter, just rewind and go back to that particular topic and listen to the topic again in slower speed. Then you will be able to understand. Okay. I have given enough examples and I have elaborately discussed the basics of auditing. So you don't need to worry if you did not miss even a single side heading from the ICAI book. Got it? Everything is in my handwritten notes. So we'll quickly revise our chapter number 1, which is nature, objectives, and scope of audit. Okay. So the before thing is not needed. So we will start from this. Meaning of audit. An audit is an independent examination of financial information of an entity, whether profit oriented or not, irrespective of its size or legal form. When such an examination is conducted with a view to expressing an opinion thereon. Independence means not being subordinate to the orders of someone. Financial information means financial statements, entity, any type of business organization. Expressing an opinion, he has to express an opinion in a written format. That is called audit report. Got it? And the next thing, just a moment. The next thing. So what has to be ensured by the auditor while conducting an audit? He should ensure that all the entries in the books of accounts are present in the financial statements or not. If all the entries are supported with sufficient and appropriate evidence or not. No, none of the entries in the books of accounts are omitted or not. And if the information in the financial information is clear and ambiguous or not, and the financial information are prepared as per essays or not, and what he has to ensure at the last, if the operational results, assets, liabilities, everything in the financial statement is portraying a true and fair view or not. Yes, this has to be ensured by the auditor. So what are the subjects? The interdisciplinary nature of auditing with other subjects. What are the subjects involved? Audit, accounting, law, behavioral science, statistics and mathematics, taxation, financial management, data processing, production, economics, everything. Okay. Next, the first standard of our subject, essay 200. What is it? Overall objectives of an independent auditor and the conduct of audit in accordance with the standards on auditing. Yes? Yes. What are the objectives? To obtain reasonable assurance whether the financial statements as a whole are free from material misstatements, significant misstatements, whether due to fraud or fraud means intentional, error means unintentional, and to express an opinion on whether the financial statements are in all material aspects in accordance with the applicable financial reporting framework. What is an applicable financial reporting framework? Framework which is followed for the preparation and presentation of financial statements. Correct? Yes. The second set of objectives is to report on the financial statements, writing an audit report, and to communicate that to the management and the intended users as per the standards of. And what is involved, what is included in the scope of audit? Scope means range. Till how much extent should the auditor go and verify? Till how much extent the auditor should go and verify? What he has to verify? He has to ensure that he will cover all the aspects of the entity relevant to the financial statements. Yes? Reliability and sufficiency of financial information. Number 2. And the third one is proper disclosure of financial information. What is it? Proper disclosure of financial information. Yeah. Okay. And scope of audit, what is not included? Yes, auditor is not expected to do outside his competence. Likewise, auditor is not an expert in authentication of documents. And audit is not an official investigation. Is it an official investigation? No. And what are the inherent limitations of audit? Nature of financial reporting. It is based on estimates. We can't provide 100% assurance. Next, nature of audit procedures. The audit will have number of transactions. Sorry, the financial statements will have number of transactions. All these can't be checked. So that is why it is the inherent limitation of audit. Audit is not in the nature of investigation. So 100% guarantee can't be given. And timeliness of financial reporting and decrease in the relevance of financial information over the time. So of course, over the time, the value of the information that is procured before might not have the same importance and the same value. Then future events. Can we assure about the future events? No. So it is the inherent limitation of the audit. Is audit mandatory or voluntary? For companies, it's mandatory. For persons, as per the income tax law, who will cross the threshold limit, for them also it is mandatory. And for other people, for them, it is voluntary. That means they can do if they want to. That too, they will do it for the benefits of the audit. What are the benefits of the audit? Audited financial statements. Audited financial statements provide high quality of information, and audited financial statements will give assurance to the shareholders. It will be a moral check. That is, moral check means check on the working of the employees. Yes, morality check. Yes, and detection of frauds and errors and pointing out the deficiencies will also be one of the benefit of audit. And next, they are helpful for government authorities, bankers, lenders, financial institutions to decide the credibility and to make various decisions for the users. Yeah. Okay. The next topic that we have seen is engagement. Engagement means formal agreement between two parties. Formal agreement between two parties, auditor and the client, where the auditor agrees to provide audited services and to express an opinion, and that particular agreement is called engagement letter. Yes. And then we have the assurance engagement. Assurance engagements. Assurance engagement means a practitioner will be appointed to provide assurance on some specific information that will enhance the confidence of the intended users. Who are the three parties involved? Practitioner, responsible party, and intended users. What are the types of assurance engagements? Based on historical financial information, reasonable assurance engagements that provide high level of assurance, extensive procedures are followed. Example is audit engagement. What kind of standards should audit engagements follow? Standards on auditing. Next, the second type of assurance engagement based on historical financial information is limited assurance engagements. Limited assurance engagement provide low level of assurance and fewer procedures are followed to draw conclusions. Example is review engagement. Review engagement. Standards on review engagement are to be followed for this kind of engagement. And then other than historical financial information, maybe the financial information or non-financial information, these kind of assurance engagements are called just assurance engagements only. Okay, so these provide moderate level of assurance. Okay, so for prospective financial information or internal controls, if you provide assurance for this particular matters, it is called assurance engagements. And the standards you have to follow is standards on assurance engagements. And so the various standards also we have discussed. Non-assurance engagements, what kind of standards you have to follow? Standards on related services. All these practitioners, all these auditors, all these firms should follow one particular standard mandatorily. What is it? Standards on quality control. SQC1 is telling that all the auditors, practitioners are required to establish system of quality control in the firm and the personnel. Personnel means team members. Team members should also follow and comply with that professional standards. Examples of system of quality control. What is the example, my dear? Maintenance of integrity, objectivity, independence, etc. Integrity means honesty. Objectivity means what are the objectives of the audit? Are we following that? And independence means not being subordinate to others. And why do we need standards? Because we have to follow a particular benchmark as per the global standards, global practices, and to improve the quality of financial reporting and to make wise decisions and to promote uniformity, to build professional knowledge and skills for the auditor, to ensure audit quality. So we are done with chapter number 1. So the next topic that we will be discussing may be chapter number 11, ethics and terms of management engagement, or we will go to chapter number 2, that is audit strategy, audit planning, and audit program. So I hope I've given you much clarity regarding the basics of audit and chapter number 1. If you have any more doubts, you can post it in our Telegram channel, which is available. The link for which is available in the description box down below. So if you want the material, I will be giving you at the end of the batch, and the books are available in BCCA app. BCCA app. For that also, the link is provided in the description box down below. So thank you so much. I will be coming up in the next session with the chapter number 2 or chapter number 11 with my handwritten notes. Thank you so much.